Hello and welcome to the Stansberry Investor Hour. I'm your host, Dan Ferris. I'm also the editor of Extreme Value and the Ferris Report, both published by Stansberry Research.
And I'm Corey McLaughlin, editor of the Stansberry Daily Digest. Today, we're going to talk with our colleague and 10-stock trader editor, Greg Diamond.
And remember, you can email us at feedback@investorhour.com and tell us what's on your mind. That and more right now on the Stansberry Investor Hour. So Happy New Year, Corey, officially.
Happy New Year.
Yeah.
How are you?
I'm good. I have COVID, but otherwise I'm great.
Oof.
And I know you had it recently too. What a way to start the year, feeling like you've been run over by a truck. I wonder if that is really, it's the perfect sort of a coda to 2022 is getting COVID, feeling run over by a truck, no?
I suppose so. I mean, we were talking about we wanted a normal year ahead, or at least I was. And, COVID to start the year. Maybe that's the normal thing now. Every winter, got to worry about that. But yeah, Happy New Year indeed. I wasn't even going to say Happy New Year because, Larry David does not allow people to say Happy New Year to him past, I think it's January 7th. But this is our first show of the new year. So
yeah,
we can say that.
That's right. We certainly can. And we need to because something's got to be happy after 2022. And of course, I'm still in that mode. I'm still in, kind of bear market. Is this rally for real? Because let's face it, I have my thoughts on how all this is going to go, but I don't know everything. I don't know the future. And my thought is still that however good you might feel about whatever the market's done in the past week or so, starting out the year with an up market, some people think that means something. The first 5 trading days, blah, blah, blah. It doesn't mean anything to me. But I still think we're in bear market mode. I still think there's new lows ahead. I think that the next time the Fed meets and they raise rates another 50 basis points, or who knows, more or less, I don't know, but probably I'm going to say 50 at least, folks aren't going to like it. They're not going to like it one bit.
Yeah, I mean, guilty until proven innocent there. This market, it's still, if you look at the S&P 500, which is what we have to look at, looking at U.S. stocks, still in a downtrend, with its kind of long-term, the simple 200-day moving average. So, yeah, I'm with you. You kind of, there's certain sectors and individual names, obviously, that are going to be are performing differently.
Mm-hmm.
So that may be something to look at these next couple months as far as what happens there. But yeah, then gosh, I forgot about the Fed for a second there. Well, the holidays holidays got my mind off Jerome Powell, but he's back.
No, yep. I forgot about it too. And I was actually I was reminded kind of in reverse by a Financial Times headline this morning. It said, companies rush to tap U.S. bond market as credit conditions ease. So I think this is like, it's like bear market rally dynamics, right? So you get equity prices rise, interest rates fall, everybody starts feeling better. Interest rates are better than they were, whatever, a week or two ago. And then, a bunch of companies, in the first the quote here is, in the first 7 days of 2023, companies from Credit Suisse to Ford issued $63.7 billion worth of U.S. marketed debt, according to data from Dealogic, compared to like $36.6 billion in the last 5 weeks of 2022. So, there is a feeling there like somebody was kind of waiting at the starting line for things to ease up a little bit, and now they see that moment and they're seizing it. Fixed rate debt, like I was telling my wife the other day, I know this sounds crazy, but I feel like we should borrow, a whole bunch of money against our house right now. I mean, I know that sounds crazy to some people, but I feel like one of the mistakes I've made in my life, somewhat of a mistake, maybe not a huge one, is that I didn't borrow enough fixed rate debt while the getting was good. And even now, like, I think with our credit rating, which is, really good. I mean, Stansberry treats us great, so I'm a moron if I don't have a great credit rating. And I think I can go to a bank right now and borrow 6 figures worth of home equity for like, 5 or 6% fixed 30-year. Like, maybe I should. Maybe I should imitate corporate America for once.
Yeah, no, it's an interesting thought, and I've seen comments lately, every time to your point about the bear market rally dynamics,
Mhm.
every time the market rallies a bit and what you just said, credit conditions easing, which I don't think we've talked about it in a while.
Yeah.
That gives Does that give the Federal Reserve more reason to stick with the higher rates for longer plan because maybe financial conditions, as they say, aren't tightening? So,
Right.
if people are still like, whatever, we'll be
Yeah.
issuing debt and whatever, letting money flow around, and we're not concerned here. Well, then
Yeah.
okay, the economy can take more pain, and so we're going to do that, and
Exactly. Dan
and
thinks
on
he
it
has
goes.
such a great job that he can go borrow a bunch of money. We need to beat that sucker down. We haven't raised rates nearly far enough. When Dan is whining and in pain, then we'll stop. You know?
There might be something to be said for that because,
That's
Dan is probably better off than a lot of people, and, financially speaking wise, I won't speak to anything else about Dan because I don't know anything in his head, but but if corporate America isn't feeling the pain,
Mhm.
Jerome Powell's pain shot, then and there's worries still worried about inflation and whatnot, what incentive do they have to even if they stop raising rates, just to keep them there for a long time, which that's what they've said they're going to do. And
Mhm.
so my point is, if we're still getting bear market rallies or rallies to begin, whatever you want to call it, a little rally to start the beginning of the year, or whatever it is, there's no reason in my mind, based on everything I've heard from the Fed over the last 2 years, um, as to why they would cut rates anytime soon. And
I know.
that's the real turning point of this, the next
Yeah.
big, huge turning point of this market, I think.
I know. Every press conference, somebody comes out and the questions, I swear it's like they're scripted because it's the same phraseology or the same phrasing, whatever, every single time. And they're saying, you know, what would it look like? What kind of a scenario, under what circumstances or whatever they say, would the Fed begin to cut rates? And then Powell's answer is identical every time, too. We are not thinking about cutting rates. Like, and he's practically said, get this idea out of your head. You're on the wrong planet. And I think at some point, and I understand being skeptical of what the central banker tells us. I
Oh
do.
yeah,
I
yes,
I
of course, yeah.
understand that, right? Because when the central banker comes out and says, the currency is very strong, there's only one reason why they're saying it, it's because it's not true. The lady doth protest too much, methinks. So I get it. I get it all day long. But when someone's actions align absolutely pristinely perfectly with everything they've told you, we're going to raise rates, there will be pain. Oh, look, they're raising rates and it's pain. You know, it's just, and it happens more than once. I mean, we have some data points here. We have enough data points to say, I think we could take Jerome at his word. And I don't think they're nearly done. I think, when whatever they call inflation, which is not CPI, we talked about that before. Whatever they call inflation is 2%, then we can talk about that. Otherwise, it's pain, 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 raise, raise, raise. Period.
Yeah, maybe those people asking the questions will be listening to you next time.
Right.
It's yeah, it's a tough slog ahead. I think this is not the, I've said this so many times. It's not the bull market genius days of whenever you want to call it. I'm thinking specifically of late 2020, where or early 2021, where
Mhm.
90% of stocks were trading above long term averages. I mean,
Mm.
that's like literally you could throw a dart and or pick out 9 out of 10 stocks on a board and you'd be making money. And we're not there. I think we can safely say that.
Right, we know that, don't we? And don't we also know, like, where's just the basic respect for history at all? You know, the are folks unaware that constantly looking for a bottom is exactly what the mistake that people make at this point in the cycle? Like, they seem unaware. Like, it's like, Galbraith, the financial memory, the brevity of the financial memory is the hallmark of the era, of the cycle, of this moment in the cycle. People just don't remember. They need to be reminded. You know, it's it's insidious. It's like watching a car accident happen in slow motion, and it's like watching it right before the moment happens. If you could just get to the driver in time and say, "Stop, stop, stop, stop." No, but you never can. And that's that's how I feel like the market is every every so often. 1929, March 2000, um, and early 2022, and then what happens for years afterwards, right? Lots of stocks go sideways. The rate regime changes, the whole market regime changes, from tech to value or value to tech or whatever it is, and assets like you know gold start being more important, and here we are again. Here we are again, man. It's just, and maybe at this point I'm prone to being too smug because I was bearish. 2022 happened, so now I'm like, yeah, I'm Mr. Smug now. I shouldn't be so smug, huh?
Well, we are in a bear market. If there's any time to be smug,
Yeah.
now would be it. So
For the bear,
or the
the
bear.
bear gets to be
Yeah.
smug once a decade, so let him be, right? Okay.
Yeah. Well, happy New Year.
Yeah, I know. Happy New Year. Well, yeah, I think I don't know. I think that's as good of a New Year's rant as you can get out of it. So maybe we should go talk with somebody who actually has some reasonable, expectation of getting his predictions right because he's nailed them over the past 2 years like nobody's business. He's been on fire. So that's our colleague and friend and 10 stock trader editor, Greg Diamond. Let's talk with him. Let's do it right now. Many mainstream analysts are predicting that stocks will recover soon. But I say we'll instead witness a cash frenzy unlike we've experienced in 21 years before stocks recover. And I'm urging Americans not to buy a single stock until they see it. I predicted the Lehman Brothers crash in 2008, and I called the top of the NASDAQ in 2021. But this is the number one most important thing to pay attention to for 2023. And I'm not talking about another market crash or politics or inflation or any of these other things. As all this unfolds, the financial consequences of what I'm talking about could last for several decades if you don't understand what's happening. There will be winners and losers, and now is the time to decide which one you'll be. This is why I strongly encourage you to read about my warning totally free today. It's all spelled out in a free report we've put together. Get the facts yourself. Go to www.stockdeadzone.com to get your free copy of this report. You can learn how to get my 4 steps to prepare for what's coming. Again, that's www.stockdeadzone for a free copy of this new report. All right, it's time for our interview once again. Looking forward to this one because we're talking with my friend, Stansberry colleague, and how does one say, expert trader, Greg Diamond. Greg is the editor of Stansberry's 10 Stock Trader. I don't know how to say this, but he's been crushing it. So let's just leave it at that, and then we'll talk about it. So, Greg, welcome back to the show. It's good to talk to you again.
Likewise, Dan. Great to be here. Thanks for having me on.
Yeah, you bet. I want to say anytime, but it would get a little crazy if it was just like the Dan and Greg and Corey show. So the year has begun. Last year you crushed it. You crushed it in 2020. You called that. You crushed it in 2022. You called the downturn there. So like when somebody's on a roll, and somebody's doing what you're doing, I gotta know, a week or not even 2 weeks into the year, what are we looking at? What do you think?
Yeah. So to start the year, I think it's going to be a continuation of 2022, meaning much higher volatility. And, you know, you guys know from following me for a few years now that, I look at things a little bit differently than I would say 95% of our colleagues at Stansberry in terms of my technical approach to the markets is based on time cycles and price. So I don't see any change from 2022 in regards to that in terms of volatility. At least that's what the technical setups are telling me. But I like it because as an options trader, that volatility means, a lot more opportunity rather than just some boring, uptrend. So, to start the year, I do think that we're going to continue to see volatility, and we've seen that starting this week with, some big relief rallies. But we saw huge relief rallies all of 2022, and I had a good year last year, but as I told my subscribers, that doesn't matter. You have to leave the last 12-month window in the past and focus on the next 12 months. But having said that, this is just another relief rally. And then, especially in some of these technology stocks, I do believe that we will see new lows. And this will, add to the overall market volatility. But, without getting into too many details, I see some tremendous trading opportunities, especially within the first 3 months.
Okay. I'm gonna guess that within the first 3 months, it's mostly on the short side?
Most in technology stocks. Yeah. Yep.
Okay.
Absolutely. Yeah. Because think about what's still in focus. It's the Federal Reserve, it's
Yep.
inflation, and technology stocks haven't are going to struggle in that environment. And regardless of what inflation is going to do or not do, it's still elevated. It's yes, is it coming down? It is, but it's still. If you go back to their 2% target, what is it at now? 7, 8? I mean, depending on if you want to look at it, some people would say, eggs are up 30%. So it depends on what the metrics you're looking at. But inflation is still elevated, even if it comes down, which means the Federal Reserve isn't gonna, move relatively soon. So, if that's your fundamental focus, then technology stocks from the short side is where you want to be.
Sounds good. In my mind, there's sort of there is somewhat of a bifurcation, like a wall in between the absolute garbagey, the really money-losing garbage in the tech area, right? The highly speculative stuff that has gotten crushed, a lot of it's never coming back, you know?
Agreed.
And then there's the other stuff, which to me seems more, tradable. I mean, no? Do you agree or not?
Well, everything is tradable, but in terms of, I agree 100% that some of these stocks that are highly speculative remind me almost perfectly of the dot com bust, where it's going to take a decade or more before any of these stocks even come close to making new highs. So, off the top of my head, a Twilio, a DocuSign, a Block, uh, you could even say, you know, some of these semiconductor stocks, even in AMD or in Nvidia, it's just they've lost 70, 80, sometimes 90%. That historically speaking, it takes 10 years or more for them to recover those highs. So yes, I agree with you 100%. It's going to take a lot more. And then on the flip side, you look at a Caterpillar, you look at a JP Morgan, you look at a Hershey, you look at McCormick, you look at Train Technologies, some of these industrial like stocks. Caterpillar made an all-time high. So, or it's right there. So that's making all the new time highs. I have these dog tech stocks making new all-time lows. There's your bifurcation that you talked about, and there's your tradable opportunities. Now, then you have to focus on what's going to lead, what's going to lag, and that's kind of where my technical strategy comes into play. So, from a 10,000-foot level, again, I'll say I think 2023 is going to be marked with incredible trading opportunities.
Great. I gotta
Yeah.
bring Corey in here. What do you think, Corey? What do you wanna know while we have Greg here with us?
Well, yeah. I mean, Greg, as he said earlier, you probably, you're looking at this from the technical analysis perspective, which 95% of our colleagues probably don't focus solely on that. A lot of people are aware of it and know about it, but there was a time, to your point, like on Wall Street, where you would have been like laughed out of the room if you were said, "Hey, I'm primarily a technical analyst," right? And so it just shows you now. I don't think that's the case anymore as far as with what you're doing with us. I mean, to me, it's a great thing about it is what you're able to point out these bifurcations in the market, and trade them, like you said, like everything's tradable. Um, I guess for people that not might not be aware of your style of just from a simple perspective of your style, like how would you describe it to like a new investor or somebody like a casual investor?
Well, I think, you talked about Wall Street, and I worked on Wall Street for, I don't know, 15, 14, 15 years, whatever it was. Um, I didn't get necessarily laughed out of a room, but people would kind of roll their eyes when I would talk about different things, and which is fine because at the end of the day, we'd sit around in these meetings and we'd have, you know, okay, what do you think? 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 And then it just got to the point where it's like, guys, we all have a way of expressing our opinions via our portfolios and what we're going to trade. So it doesn't really matter what I think. What are you guys going to do to make money? And so I would, I leave the meeting and I just go focus on what I needed to focus on to be successful. And so I think for anyone listening to your question, Corey, what is it? Where does this technical stuff come into play? You need to have an open mind about what is possible and what you've been, I would say, conditioned to learn, whether CNBC or getting your MBA or studying finance and studying economics. It's all the same stuff all the time. So to step out of that box and to get into something new is difficult for people to grasp because it gets out of their comfort zone. It's not something that they don't necessarily understand. Well, how does this work? Why does it work? It doesn't matter. Does it work? And I think, and one of the struggles that I knew I was going to have starting at Stansberry Research is getting subscribers to understand that the framework of technical analysis. Yes, it's different. Yes, you've probably read some crap about some dope on Twitter who thinks they understand technical analysis, but they don't. And so to get that, what did I have to do? I had to be successful, right? I had to win. I had to show that it was that you could do this and that it does work. Why? Well, if you want to figure out the why, go for it. I'm just telling you this is the strategy that I use and it works. And some of this stuff, it's not perfect. There's no holy grail. And we all know that. And I take risk management very, very, it's very important to me. It's something that I stress all the time to subscribers. So, it's not to say that, it's perfect because there's no such thing as perfection, but it's about improving your probabilities of success. And I've proven that, especially in a year like 2022, like, look, these are the turning points. These are the setups, and we're going to trade to win. And you had a nearly 80% win rate last year. So if people want to, I'm never going to make everybody happy. I mean, that's just impossible. So if you like what I do, fantastic. I'm going to show you what to do, and I have a passion for what I do. Great. If you don't, that's great. Follow somebody that you do like, that does make more sense to you. That's fine.
Well said. Yeah, I mean the difference. When I got into this industry too, was in a similar position. I was reading a lot of and I've talked with Mark Chaikin about this too, who he's way smarter than I ever will be when it comes to markets. But when he had a
He's only been
similar,
doing it. He's only been doing it for
yeah,
like 55 years. So
yeah, and
what does he know? What does he know?
only invented amazing, indicators and technologies and whatnot. So, we can get there eventually, but,
Yeah. Right.
no, but his point was, when he first started was, 60 years ago, in the markets was, he was reading these fundamental reports and seeing, all these all different conventional things. But then, you know, you could have the best company, or a good company, say, and if the market conditions aren't right and the technicals weren't there, he was losing money and people were losing money. And so that's my point was when I first got into this industry too. That's what I picked up on as well. Like, there's good ideas that they're out there, but to apply the technical analysis, and for somebody who's may not be a short term trader, or you could still apply technical analysis to any sort of investment. Is that right?
Absolutely,
Yeah.
absolutely. And what I think a lot of people don't focus on, which they should, especially on the fundamental side. And I look at the fundamentals. It's not like I don't look at the fundamentals, because I do, especially over the long term. They do matter. But when you have an environment like we had at the end of 2021 and all of 2022, where emotions are high, where there's a new macro setup, whether it's inflation, whether it's war with Russia and Ukraine, whatever the situation might be, what people don't understand, or what they should focus more on, is that, imagine all the big funds that are out there, and all of a sudden they're down 15%. Okay, do you think that they care about these fundamental reports and what the underlying, you know, macro or specific EBITDA, whatever the heck that's called, in a company? They don't care. It's all about the risk management for them. So that's where emotion completely takes out every other fundamental aspect that you could think of, and then it becomes an emotional roller coaster across, trillions and trillions of dollars across funds all around the globe. And that's where the emotion comes in. What is emotion? Well, that emotion is what we study in technical analysis, because that emotion is expressed in the chart via the price action. I think that's an important concept for people to understand.
Yeah, I mean, it harkens me back to good old Ben Graham. The market is a voting machine in the short term and a weighing machine in the long term. And both of those terms, it's not like they're cut and dried. The emotions can take over and reign supreme for a long time, months, couple of years. And these speculative episodes, you see it, for years at a time.
It's a
We just
humbling
went,
mechanism. It's a
oh
humbling
yeah,
machine. Yeah, it
yeah,
really is.
yep. And they can stay crazy for longer than people can stay solvent. So yeah, and here we are again. Like I always say this because we always wind up back at this spot: risk management. We always wind up back here. Like we'll start out talking about breakouts or fundamentals or whatever your thing is, and then it'll all converge right here. That's where the rubber really hits the road, and how you in other words, one way I look at it, it's like how you enter the position is of course very important. Let's not say that. But how and when you exit, that's like make or break,
Right.
right?
Right. And especially trading. So I trade long options. I buy calls and I buy puts. Now you talk to the majority of anyone out there and they'll say, well, that's a losing strategy, because you have time decay and you're gonna have all this stuff. Well, it can be a losing strategy. And for the most people, they don't understand the time aspect. But this is where time analysis is such a big part of my strategy. And by having that timing mechanism, I'm able to say, look, yes, time decay theta is an issue, but by using time analysis through the methods of WD GAN, I'm able to capture that and use it to my advantage and have a really good win rate and be successful, where most people would prefer to sell options.
Yeah, they would. And I've talked about options with a few guests over the past few years here. But I remember Wayne Himmelstein we talked with, and he was buying options. He was buying like, near the money puts and things. Um, and again, though, what you said, Greg, is intriguing. Let's talk about that. This is one place where you can really shine because nobody talks about this. Nobody talks about time. Nobody talks about analysis of time, company fundamentals, technicals, the usual thing. The Fed, we all talk about the same stuff more or less, but nobody brings this topic up.
Cycles, right, Dan? Yeah.
Yeah,
And I
yeah. So
think
tell me about this.
it's so whenever I bring it up, and I'll have a more of an overview here because I don't have enough time. But
Sure.
the you know it's always, well, how do you measure it, and what are you looking at? Why does it work? The why doesn't matter. I'm not concerned when you start. And look, the time when I talk about time analysis, I'm talking about WD GAN. You can look them up. If you're an Alliance member, you've probably seen me talk about it. If and You'll see all types of stuff on the internet. He's nonsense. He's this. He's that. If you want to, if you don't want to believe it, I get it. I, I've I've been doing this for so long that I don't try to convince people whether or not they should follow it. I'm not trying to, or I don't try to convince them to say this is the end all be all, but it works and it makes sense. And that's all I care about. So when I look at different cycles, and there are multiple cycles when it comes to cycle and time analysis, and it's not easy. If it was easy, then everybody would be doing it. But I think the most important part is that there's nothing new under the sun. The times change, the characters change, what moves the markets sort of changes in terms of technology. We had railroads back in the early 1900s. Now we have planes and battery cars and all this. Yeah, all that stuff changes. But the reaction over time of investors goes in cycles, and that never changes. And that's what's so fascinating. Now, are you going to read one book from W.D. Gann and you're going to have it all figured out? No, you're not. It's going to take you years to understand. But my subscribers, I think, would attest that I go through as much detail as possible and explain these cycles in a way that is easy to understand, but more importantly, how we use it to trade, to be successful and make money.
So maybe just give us a little taste. Like the 7-year cycle is an important thing to you, isn't it?
Right. Yes. And this is what I'm going to be covering this Thursday in my webinar. What is fascinating about the 7-year cycle, it allowed me to call the top in 2022. And without giving too much away, there's an important inflection point in 2023. But there's someone named Samuel Benner who predates W.D. Gann. But what I find so fascinating is that they both studied the concept of time and these cycles. And they didn't know each other. They weren't alive at the same time periods, but they both came to the same conclusions. And what's fascinating about 2023 is that both of these setups, or both of these cycle analysts who are now dead and were alive at different points in time over 100 years ago, now is coming to 2023 as an inflection point, and both of them are saying the same thing. So it's, again, I'm pretty excited about 2023 just based on that concept. And again, I'll have more to say about this this Thursday.
I mean, yeah, that's great, Greg. I mean, what you just said there about how two dead people can be on the same page about something that's happening in 2023. I've never that speaks to cycles from the reverse perspective, like today we're living obviously, and you're going through these cycles and adding them up to certain times and dates and likelihoods and possibilities and all the sorts of things. But for two uh you know dead people to be arriving at the same conclusion posthumously, this tells you about this too. I've never actually thought of it that way before, but the and to your point, to the same idea, me and Dan have both talked about or written about this before, with the idea of the how Neil Howe and William Strauss's the saculum, right? The 80-year cycle, which to me, when I first came across that, it made so much sense to me because it's basically I won't get into all the details about it, but basically the idea it comes on that there's every 80 years, or the length of like a normal human life, there's these cycles, and from start to finish, and various cycles within that period. And it makes too much sense when you think of it that way. Like, there's when you live a human life, you start at the beginning, you get to the end, you learn stuff along the way, and that happens repeatedly over time. And
And think about how much information, or how many traditions, or how many solutions to problems are then lost within that 80-year period, and then we start all over again, and we do the same thing. Especially when you talk about government and politics, which I'm not going to get into. But interesting, you mentioned the 80-year cycle, because Gann followed an 84-year war cycle, which I'm sorry to say is really coming into the fray right now. So if you start from 1939, 1941, the kind of beginning of World War II, you add 84 years to that, and we're kind of getting into that low cycle. But from a 10,000 foot view, I'd also like to say, some people are probably listening to this and being like, "What in the hell is this guy talking about with all this cycle crap?" All I'm going to say is that you have to have an open mind about what is possible. And again, as I mentioned earlier, kind of step out of the box and be like, you know what? I'm open to other interpretations about how the world works, how cycles work, and how the markets works. And again, there is no holy grail, but I can promise you, you will learn something new that will improve, not guaranteed, but improve your probabilities of success in the markets, in trading, or and in long term investing as well. It's not like I'm just sitting here day trading. It's not what I do in 10 stock trader. I look for shorter term opportunities, but I also look for, I started this in 2018, 2019, and since then we've kind of been in this crazy volatile round trip market, as I call it. So
Mhm.
we haven't really had those long term plays since I started at Stansberry Research. So down the line, hopefully that's something that I can get into. And I think 2023 might be the start of that. But again, going back, I just want to mention that to those who are listening who have no idea about understanding time and time analysis. That yes, it's something new. Just open to your mind to what is possible, and I think you'll enjoy it.
All right. Um, yeah, everybody wants to enjoy it after last year, don't they? People enjoyed it and enjoyed it and enjoyed it, and then they got their heads whacked off, and they'd kind of like to enjoy it again. Um, but let me ask you this: part of my thing, my outlook, whatever you want to call it, has been that um, this was a major inflection point. We were in a major financial mega bubble, not even just your run of the mill bull market top, but a major financial mega bubble. And and the and for the next, I don't know, I call it 5 or 10 years, I don't even know. I won't claim to know the period of time, but for some significant period of time, um, the regime has changed and will remain changed. Now, I know you mostly care about technicals, right? I get it. So let's focus on that because you and I have talked about all kinds of things, the Fed and the economy and everything. But let's focus where your expertise is the greatest. Like for you, are these 7 year cycles? It's just very generic, and you don't look forward and say, well, you know, technology worked gangbusters, and now I'm shorting it, but do you look beyond the current opportunity this year? Do you look over the next 7 years and say, I suspect technology is really gonna suck wind for 5 years or something like that?
Yeah, I so I try not to because I want to focus on the present and the next trade or the next investment, but I can't help myself, especially this weekend I was just looking over stuff and I'm like, okay, well if this equals this and this equals that, and I start getting into like 2027, 2028. I'm like, okay, let's come back here for a second. But look, so one to your point, technology 5 years out is going to suck. Look at what happened after the dot-com crash. Look at what happened technically, and we talked about this earlier. It took a decade for some of these stocks to just attempt to get back to those all-time highs. Some never did. And then what you had? Then you had the housing crisis, and then it just dropped everything again. And then here we go. So uh, again, for those who are interested in this cycle analysis, one of the aside from the 7 is the 20-year cycle. And if you go from 2018 to 2022, 2023, it lines up almost perfectly with 1998 the tech bubble, which goes from 2018 to 2020, the COVID crash, and those things both rallied, crashed, and we're kind of in that 20-year cycle again. So to answer your question, Dan, absolutely, we can absolutely see a lot of these tech stocks still follow that same cycle. Yes, you will see incredible rallies. I mean, you see today, Advanced Micro Devices up 15% in 2 days. It's a short squeeze. There's no doubt in my mind, but again, it's still down 70% from its all-time highs. So over the course of the next 5 years, we'll see a lot of that, but they're going to struggle in terms of the relative strength relative to a Caterpillar or JP Morgan or some of these industrial stocks that are probably going to do pretty well through this higher inflationary environment.
What about sectors, Greg? A lot of guys like who trade options, one of the basic things they like to do is just to carve the S&P 500 up into all its component sectors, and and kind of, I think Druckenmiller calls that like looking inside the stock market.
Yeah,
Do you,
I love that, and it's a big proponent, or it's a big aspect of understanding technical analysis, and something that I've been stressing since October. Really, is something called price divergence, and that happens within these sectors, and you can see it. I just mentioned it earlier. Caterpillar made a new all-time high, and we're seeing, Microsoft made a new low last week. So, I mean, those are two really, and if you look at the correlation from 2020 low, those stocks were trading in tandem. Caterpillar rally, Microsoft rally. Well, look at the sectors that they're in, and you can do that with semiconductors. You can do that with financials. So yes, absolutely. I mean, the sectors matter, and when you have these huge price divergence, well, good. What did that set up for? It sets up for what are the next 5 years going to look like? It's going to be more of the same, where you have these huge price divergences. And for me, it's great because those are great technical signals to trade on. So yeah, absolutely. I look at the sectors every day.
do you do pairs trades?
No, not really. I tend to keep it, very, very simple. Just buying calls and buying puts. I really don't like having big exposure to being long and short at the same time. It's not that you can't do it; you can. It's just it's not in a market like this. It's tough. It's tough.
Yeah. Gives you 2 ways to be wrong.
Yeah, exactly, exactly.
Right? Yeah.
Yeah,
Of
And what
course.
I'm
Yeah,
hearing here is the when you bring up Microsoft and Caterpillar, and one of my favorites of the last couple of months has been John Deere. The tractors are just, tractors are in vogue again, which I think there's a lot of interesting things you could get into with that. But I think what I'm hearing is you really need some sort of plan or strategy to identify these sectors and trends, and then, as to your point, Greg, I guess act on them, right? And
yeah. It's really a roadmap, Corey. And I talked. I just happened to bring up Caterpillar and Microsoft. That all those two, that pair helped me identify the top among the other cycle stuff. But just on the price action, it helped me identify the 7-year cycle. It also helped me identify the 20-year cycle, which added to my conviction that 2022 was going to be a major top. And then I go back to time and price, and people go, well, why? I don't know. I don't care. It worked in the past, and there's a relatively good probability that it's going to work again in the future. And so when you see these historical rhythms or cycles or patterns in the market, and they keep happening over and over and over again, why not follow them? And I say it all the time, let the market prove me wrong. But that's why I incorporate risk management into what I do. But I just think, and I don't think I know I have, based on a lot of the feedback I've received, is, I don't want to say like turned people, but made them believers in the strategies that I use. And again, it can be a little bit eye opening and surprising, and if not confusing. What is this guy talking about? But when you start to study it, and you study it for nearly 2 decades, like I have, you start to see this stuff all the time, and it works. It works to the point where I'm so confident in it that it's the first thing that I focus on, rather than what Wall Street thinks. I never watch CNBC. It just completely changed how I look at the markets, the world, politics, everything.
I should say that we get a lot of feedback email from in the digest, and um, I've seen a lot of people might be hearing this and thinking, oh, how does technical analysis fit in my thing? But I've seen long-term investors, guys with 401ks and talking, obviously, maybe not even exactly making the trades as you say them. I'm talking about alliance members and long-term subscribers, not even using the exact trading advice, but using your kind of macro outlook and applying it to your own portfolio. And that's something that people may not recognize too. Just, and that speaks to, within the Stansberry universe, of how you can use your kind of outlook, much like anybody else's, Doc's or Dan's, or, or the investment advisory team, to fit all these pieces together. So even if you're not, into the exact specific. If you check out Greg's stuff and you don't want to make the specific trades, you can still use the information to make decisions in your own portfolio.
Yeah, and I think this is something that's really fantastic about Stansberry research in general. So I worked for a hedge fund. Think about, if you're an investor in a hedge fund, think about what you're doing. Yeah, like, so, some people would invest, I mean, $1 million, let's say, and some people invested up to $100 million. Okay, talking serious wealthy people. Okay, but let's say you got a half. Let's say you just got $1 million, just to keep it simple, and which is a lot of money. It's a big part of your portfolio. You are stuck with that one strategy for the time that you are in that fund. And usually you have a lockup period, 2 to 5 years, whatever it might be, different rules. Well, think about what Stansberry Research offers in terms of 25 different products or editors or whatever it might be. So, last year Greg was doing great. This year Dan's going to do great. So my point is that, you have these options to say, you know what, Greg's saying this, Dan's saying this, Doc is saying this. And some people look at that as a negative. I look at that as a positive because you have so much different information from different strategies that you can lean on and say, you know what, I like all three. This is what I'm going to do to my portfolio as a result. So I think having those options is really beneficial as opposed to just sticking your money all with one person and then, crossing your fingers and hope they do well.
Yeah. There was a lot of finger crossing. I think there was a lot of broken fingers now.
Yeah.
Well, we should say, I don't think we've said specifically, Greg, this time last year was calling the top in stocks. And so who else,
And
how many other people were doing that? Let's give credit. Like that. This is what we're all talking. This is why we're talking about this, is because, all of these things kind of can line up to an independent thought where you can see the top and stuff.
I appreciate that. I think, and the other thing too is, you listen to one of the, this is probably going to get me in trouble, but I have no sympathy, or I just find it hard to believe that these economists on Wall Street at these big banks make over $1 million a year. They have all these big things, but they don't take any risk. Zero. They take zero risk. And then they just, they get on the shows and they do this and they do that. But they don't, there's no accountability when they're wrong. When they're right, they're all over again. You see this all the time. It's one thing for me to call a top. It's another thing for me to trade it, to put thousands of subscribers' money on the line and say, this is what we're going to do based on my analysis, and we're going to make money doing it. That's, so, and again, I'm a trader. That's what I do. But, I think it's that old saying that talk is cheap. Like, put your money where your mouth is. And again, it kind of goes back to the confidence that I have in time, in price. And while it seems suspect to a lot of people, when, you follow something for so long and it works over and over and over again, that's where you build the confidence. And that's, you're not going to see me on television or on CNBC. It's going to be with subscribers and saying, look, this is what I think. And this is actually how we're going to trade it and invest in it.
Yeah. You're that's right. It's money where our mouth is. And those guys, those Wall Street guys especially, they basically, like, it's almost like they're working for the government, right?
Right.
Because
and part of me is jealous. I'm like, you make $1 million a year and you just sit there and talk. It's great.
If only I could get $1 million pre-tax without having any consequences for being wrong.
Yeah, it's kind of like
give me
being
the capital.
They're like being the weatherman.
Yeah.
It's
That's
unbelievable.
Right.
It's like
it's an army of
you're a
weathermen.
meteorologist in San Diego, California. What's going to be like today? It's going to be nice. Okay, well, back to you.
That's right. Sunny and 70. Back to you. Yeah. All right. Actually, Greg, I love talking with you. It's always a lively conversation, and we always learn something. So it sounds like you don't want to give too much away. I understand. You want folks to tune in on Thursday night to your webinar. What time is it?
I believe it's in the morning. I believe it's at 10:30. I think.
Oh,
I'm pretty sure that just, if you go to there'll be a link at the end. You can sign up for it, and then
I have that.
But you can watch it for 24 hours or 48 hours, whatever it might be. So I want to say it goes live at 10:30. But if you're working or something, you can check it out at night, whatever it might be. So
the link is actually dan2023.com, I guess I'm just so,
Oh, you're
I'm just so s
taking over my stuff? You're taking the
I
credit
know,
there, Dan?
I'm so stuck on me, I just, it had to be dan2023.com to see Greg's webinar, right?
I like it. I like it.
But if you
Dan
go to
reserved
Dan
that domain a long time ago.
That's right, I've been waiting for this moment to use it.
There you go.
So if you go to dan2023.com, you can sign up, and then you'll get an email, and um, they'll tell you when Greg's webinar goes live, and you don't want to miss it. I hope everybody by now gets the fact that Greg is different from many of the investors that we interview. He's different from, like we said, among our Stansberry colleagues. Myself included. I'm just one of those like fundamental driven guys. Um, but yeah, definitely check that out, dan2023.com. So Greg, it's time for like the final question, which is the same for every guest. If you could leave our listeners with a single thought today, what might that be?
Ooh, a single thought. I'm going to say, if the most important thing in real estate is location, 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 then the most important thing in trading is risk management, risk management, risk management. And I know we always talk about that, and you're right, we always get back to it, but it's that important. And it doesn't matter if you follow, a weird technical guy like me, or a fundamental person like yourself, or you throw darts at a board. If you have no risk management discipline, you are not going to make it very long as a trader or as a long-term investor. So, that it it's number 1, 2, and 3, and then everything else comes after that.
Well said. And like you say, maybe we say this over and over again, but there's a reason for that, isn't there?
Yeah,
It really
yeah,
is
and I
that
think
important.
people really found that out in 2022,
Yeah, they
right?
really did.
And
Yep.
it just here's actually a really a quick story to end, which I think you'll find interesting. I'm not going to name any names, but I interviewed a long time ago. I want to say 10 years ago, for a fund, and we're going through the whole process. And I got to the head guy, the head of the firm, and we were talking strategy, we were talking options actually, and I said, his strategy was a little different than what I was used to, but that's fine. He was the head, and I said, well, okay, well, what happens if you're wrong? He said, well, I don't use stop losses, and I said, I'm sorry, what did you what? And he said, I don't use stop losses, and I just very politely just put my notebook down, and I said, I don't think this is going to work out, and I shook his hand, and I left, and 3 years later they went bust. So again, and he's a smart guy, successful before that, but I heard no stop loss, no risk management. I'm sorry, I want no part of that.
Yeah, the market doesn't care how smart and successful you are, does it? It'll wipe you out
Absolutely
just
not.
the same. Yeah.
Absolutely not. No way. Yeah.
All right, man. Thanks for being here. Always a pleasure to talk with you.
Likewise, my friends. Have a good one, and to check out my presentation on Thursday.
Right, dan2023.com to sign up. Yes.
Thanks, Greg.
Thanks, guys.
Hey, Dan Ferris here. As you just heard on the podcast, 1 year ago, my colleague Greg predicted a market crash. He was spot on. He had the nerve to say, 2022 will see the worst crash since 2008. Sure enough, you could have doubled your money 6 times with Greg's recommendations after he nailed the crash of 2022. Well, today Greg is back with his newest prediction for 2023. And keep in mind, he even predicted the 2020 crash 3 months before it began. And you could have doubled your money 11 different times on his picks leading up to that. He's been doing all this using a strategy that dates back to the Civil War. And once again, he's agreed to show you how to potentially double your money in 2023 over and over again without touching a single stock along the way, including the exact date he predicts a huge market move. To learn more, go to dan2023.com. That's my first name, dan2023.com, where we're posting the full details of where stocks are really going next from the guy who nailed the 2022 crash. And by the way, We also have a special surprise for you on that site, which has drawn the interest of 750,000 people already. But you can see it free of charge at dan2023.com, including the name of Greg's number one stock for 2023, which you could have already doubled your money 5 different times using his strategy. You'll get it free of charge from dan2023.com. So check it out right now. What a pleasure to talk to Greg. He puts it all in the simplest terms, and what he does is simple and effective. And I just, I can't thank him enough for reiterating the importance of risk management. I mean, that's just, I feel like we should do some kind of a whole show on risk management. We could probably interview 20 people and get all the best segments, but that was a lot of fun.
Yeah, I really, I would encourage people to check out Greg's event just to hear more on what his strategy is and his outlook on the year ahead and the risk management he uses. And he really does a good job in 10 Stock Trader of giving instructions, very specific instructions on the trades and how to do them, and why we're looking at them, and what's the risk reward. That's a lot of maybe people don't even get to that part of the investing part, and that's largely due to his technical analysis approach, the risk reward of a certain trade. So yeah, I know we talked about a lot of different things there, but I think you should really hear him out. He did call before the pre-COVID crash. He was already saying, basically calling a top there, and then in 2022, same thing. So I don't know what else you need to say or hear. Listen to what he's saying now.
Yeah, Greg called the top 5 days before it happened or whatever, and then boom, traded it. I called the top for like 5 years. Little bit different.
And I didn't call anything, so
You're smarter than all of us. That's right.
But yeah, no, it was a good talk. I'm happy to be a part of it.
Yeah. I mean, just another great talk with Greg Diamond. And not only another great talk with Greg Diamond, but another episode of the Stansberry Investor Hour. I hope you enjoyed it as much as we did. We do provide a transcript for every episode. Just go to www.investorhour.com, click on the episode you want, scroll all the way down, click on the word transcript, and enjoy. If you like this episode and know anybody else who might like it, tell them to check it out on their podcast app or at investorhour.com. And do me a favor, subscribe to the show on iTunes, Google Play, or wherever you listen to podcasts. And while you're there, help us grow with a rate and a review. Follow us on Facebook and Instagram. Our handle is @InvestorHour. On Twitter, our handle is @investor_hour. Have a guest you want us to interview? Drop us a note, feedback@investorhour.com, or call the listener feedback line, 800-381-2357. Tell us what's on your mind and hear your voice on the show. For my co-host, Corey McLaughlin, till next week, I'm Dan Ferris. Thanks for listening.
Thank you for listening to this episode of the Stansberry Investor Hour. To access today's notes and receive notice of upcoming episodes, go to investorhour.com and enter your email. Have a question for Dan? Send him an email, feedback@investorhour.com. This broadcast is for entertainment purposes only and should not be considered personalized investment advice. Trading stocks and all other financial instruments involves risk. You should not make any investment decision based solely on what you hear. Stansberry Investor Hour is produced by Stansberry Research and is copyrighted by the Stansberry Radio Network.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates. You should not treat any opinion expressed on this program as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of opinion. Neither Stansberry Research nor its parent company or affiliates warrant the completeness or accuracy of the information expressed on this program, and it should not be relied upon as such. Stansberry Research, its affiliates, and subsidiaries are not under any obligation to update or correct any information provided on the program. The statements and opinions expressed on this program are subject to change without notice. No part of the contributor's compensation from Stansberry Research is related to the specific opinions they express. Past performance is not indicative of future results. Stansberry Research does not guarantee any specific outcome or profit. You should be aware of the real risk of loss in following any strategy or investment discussed on this program. Strategies or investments discussed may fluctuate in price or value. Investors may get back less than invested. Investments or strategies mentioned on this program may not be suitable for you. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation that is appropriate for you. You must make an independent decision regarding investments or strategies mentioned on this program. Before acting on information on the program, you should consider whether it is suitable for your particular circumstances and strongly consider seeking advice from your own financial or investment advisor.